First, we'll go over each indicator, how they work. So I'm going to turn a couple of things off here so we don't get too messy. So first, we'll go over trend. So obviously, it's doing exactly that. Basically, I'd classify this as like a super trend indicator. It's using average true range, so volatility. An uptrend, for instance, would be when price closes, at or below the lower trailing band. So think of it sort of like a trailing stop loss that's triggering to detect when that trend is definitively changed. Um, so in terms of like function, it's actually really really simple. Um, Picks up when the trend changes, and it tells you that. So obviously, start of the tariff crash here, we had that big trend change. It's signaled. Um, the yellow bar could essentially be a red bar, but it's yellow to indicate it has now changed. Warning you, this is it. It's changed now. And then when we get that purple bar, again, that could be a green bar, but it's purple to indicate, hey, trend has physically changed. And then we go up from there. And you're seeing that throughout that run. Now, when we go to smaller time frames, you're still going to see the exact same thing occurring with trend change because it's still functional. It's functional on any stock, crypto, whatever you're trading. It will pick up definitive trend has changed. You can see here, trend change went down, went back up again, and then we went back up into an uptrend. So it's always going to be accurate. The only thing that it can't predict, because it's not a prediction tool, it's just trend, is say, for instance, here you had this trend change signal, and then the next candle over, a bomb drops and price will go down. And then when it gets down to around about here somewhere, you're probably going to see, it suffered a downtrend change. So we can sort of see that here. If this was in opposite, you'd see it that way, is what I'm sort of saying there. So that's trend. Very simple, and that's how it's working. Does that all make sense to you guys?
Yep, no problem.
Okay, so now we'll go over to the buy and sell alerts. So essentially, what we're looking for here is market shift. So essentially, it's using RSI and SAR. So it's a parabolic SAR. This is when basically market is shifting from a low price point to a high price point, and it's basing it instead of on price but on the actual RSI signal. So we're getting three different signals. We're getting a buy, a strong buy, and then a very strong buy, and then obviously the same for sell. So sell, very strong sell. So when we get a strong sell, it's printing, this pink box over here. And then when we're getting a strong buy, you're probably not going to see one on this sort of time frame. It's printing a white box. So over here, this was a strong buy signal. And then at the same time, we're calculating bearish or bullish divergences on the RSI. So that's giving us insight into what's potentially going to happen next. Now, obviously, you should just be looking at just the signals themselves. So these ones I find really interesting because this was obviously the market top here that we recently had. That's the highest price. We've basically had three warnings. Get the hell out of it. So that was obviously advantageous if you were trading it. When we look at different time frames, I like to look at all different time frames, but when we're looking at, I do a custom like 12-hour, I try to catch things a little earlier if I'm doing a longer, swing trade. So it'll print, this guy here printed on, Monday the 24th, but if we went to a day time frame, we got the print on Tuesday. So we're able to catch it that day earlier. And then obviously the more back you go, the earlier you're going to get it. So there's still Monday, but a bit earlier. And then you can get it at 8 o'clock. So it just depends how long you're going to be in the trade for, what your outlook is. So you need to judge that by what's happening, whilst being in that trade. So obviously, if you're on a 1 minute time frame, it's giving you buy and sell signals, and they are highly accurate. I mean, if you jumped in here, this is a strong signal. Obviously, your next one to get out is here. It just depends. You really have to use them in conjunction together. So when we combine trend, we're obviously getting more information and confirmation that, okay, that was the signal, and then yes, trend changed, and then we were good. Then you use, obviously, if this was a day trade in and out, you would obviously use things like, this is a topping tail. I can see that there's, support resistance. If we turn things on like Bollinger Bands, you'd start to determine what to do whilst in the trade. So next up, what we're going to go to now is our sentiment. Let me turn this one off. Okay, so sentiment is going to be printing different candle colors. So essentially what we have is, green is for buying, light green is for, buying, dark green is for heavy buying, and then same for sell. Dark red is for heavy sell, light red is just selling, and then the orange is just essentially neutral, so no real direction. And you will notice when things do start to change, like here, you've obviously gotten heavy buying, it's gone into light, then it's gone into neutral, and then it's shifted back. And you will see that this sentiment only does work on the daily time frame, but it will work for any stock. Essentially, this is a really, really complicated indicator. There's a whole bunch of market inputs going into this to deliver these results of what's actually happening. So again, you'd essentially be looking at a stock saying, is it safe to buy? I've got a trend change, I've got a buy signal, and what does my sentiment indicator say? Are we safe here? Is this okay to do this? And I mean, you can see this here when we go in, we had, light and then heavy, everyone was interested. Obviously, it's a bit of a doji, it's a warning, and then, starting to fade, going back to neutral. And it's just telling us what's happening in terms of the sentiment. It's a combination of using everything together. It's not just a case of using trend only or using sentiment only and the indicators only. It really is a combination. And then, like I said, catching things early. And then, here, this was an obvious bearish divergence on the RSI where, we've made a higher high with a lower RSI. So
Dad?
all sorts of signals on why to get out of that particular trade. Now, with the institutional buying, this is also a really, really complicated indicator. Obviously, green is for buying, red is for selling. And then when we look at, you should turn the line on as well. The fast signal line makes it a little easier as well with the flow. We can never ever track institutional buying. It's not possible. We're never going to know. But with what we're doing here, it's most probable is what we're saying based on how this indicator is functioning. So based on price behavior and a whole bunch of different input metrics, this is most probably they were buying here and here, and here's essentially neutral but going down, so they could potentially be selling. You wouldn't rely on this on its own, but again, combined with everything, that's going to tell you, give you an overall picture of what's happening underneath the market. So, sort of think of it like playing poker, but being able to see everybody's cards. You've got more information, you can do things with that. Obviously, you still use your own inputs. Like I still like to use the stochastics at the 533 for the various market cycles. Obviously MACD as well. But yeah. All right. Have you guys got any questions?
No, not yet.
Can you
It's
show
one of those
us?
things where we're going to play with it, I'm sure, to get more insight into what you're saying, but looks great.
Yeah.
Can you show us where the institutional indicator could predict something or how you would use it?
Yeah, sure. So I mean, when we had these market lows here, it's predicting buying. So based on your risk appetite for those two particular days, you could then decide, okay, look, it looks like they're buying there. And then if we were to switch on, sentiment at that point, it's indicating the opposite. But the price action was indicating that they were buying. So overall sentiment was saying, this is really bad and there's a lot of selling taking place. But it's based on price behavior. So it is difficult to trade just based on that. I wouldn't have jumped in based on just this indicator here. Obviously, it'd be a good buy to get down on here on these lows. But yeah, I'm looking for a safer entry. So the safer entry is always going to be on that buy signal. And with those buy signals as well, what's really cool is we can get a 50% opacity print. So if any of you guys have been using it yet, it goes 100% on the signal when the candle is completely closed. But during candle formation, we're getting a 50% opacity. So that can obviously change during that candle formation, but once that candle closes, then it's set. But that essentially can give you that signal earlier. And then what we can do is, we can set a whole bunch of different alerts. So if you want to be alerted to a particular stock, so for instance, SPY on this particular one, you'd go down to your buy and sell signals, and you'd say, I want to be notified on a buy signal and, on the 1 day time frame. And then obviously you could change it to, different time frames. So I do set a bunch of different signals here, as you can see. Like I've got SMH, that's a percentage from 200. So here, look, I've activated a sell signal because I'm in gold at the moment. On a 9-hour time frame, as well as a 12-hour time frame, as well as palladium on a 9 and 12, and then same for SPX on a 1 day time frame, NDX on a 1 day, and so on, as well as weekly, and then downtrend changes as well. I want to be notified about these particular changes. And again, I'm doing different time frames because I want to know before the daily time frame tells me it's too late, you got to get out. So that's really good for getting those push notifications, like, oh shit, something's changed. We need to take action now, and then you can do it. So think of all of these like different market shift points when you are getting these signals. The green diamonds and the red diamonds and then the bigger diamonds, obviously as well. They're definitive market shift points. It has shifted. So, for instance, here when we go to this buy signal here, we got all the way up, it shifted down, and then obviously it got you out of all of this particular loss. And I mean, at this point here in the market, and even over here at this one, a lot of people were concerned after the tariff crash that we could keep rolling down. Now, for instance, this signal here, it was a definitive large shift. That was a strong sell, not a very strong, but a strong. And price did continue sideways for a few days, and it was unsure essentially at that point what could have happened. So had you stayed in the trade, obviously it would have worked out, you would have been fine, but it could have changed on you on that particular instance. So it's never ever going to be completely right, and that's one particular instance where it's wrong. Obviously you should have just held and stayed in that trade, but you did protect yourself at the same time. This could have rolled over. It didn't, but it could have. There was a shift in sentiment, price, everything to change then, and that's when you protected yourself. So then the next safe entry was to get back in, and then we obviously had this big change here again to get out, and again we do that there. Now if we turn on trend and we use them combined, we see, okay, it warned you the day before the trend change. It said get out of this thing. And then obviously if we go to, what date is that? If we go to a smaller time frame, so 31st July, let's go to a 2-hour time frame. See if we catch it. All right. So you had a trend change here on the 2-hour. That signal to get out of that one there. You obviously had these sell signals approaching as getting choppy. I would also base the fact that we're tagging the upper trend line and rejecting. Again, the indicators are to help you. They're not to trade for you. They're to help you make a decision. So you could obviously see based on this, you're at the top of the parallel channel. You've got the couple of big signals coming up. You're getting a lot of chop. And then this trend change here told you to get out of it. So if you were in there at that point, that's where you would obviously be like, it's not working out anymore. It's up, it's down, it's all over the place. And that would be the signal. And then obviously that would have protected you from, what was it, 31st of July over here from this big drop. You obviously missed it. You would have avoided all of it. And then you would have had the, hey, trend changed again. Safe to get back in. And then obviously trend stayed up. The buy signal still stayed active through this. And then again, signaled out, but trend is still up, trend's still green. So you need to make decisions based on what you want to do, in and out, whatever it is. I did put through a whole bunch of hypothetical trades on the QQQ, essentially saying year to date, what would I have done if I just followed the indicator blindly, completely blind? Just, hey, look, trend changed. I entered. Oh, it said to sell. That would be a loss there at that point. It said again, enter here. It said to exit. I punched all of this data in based on enter, exit, enter, exit, enter, exit for all of this up until these ones here. After we broke trend. And basically that came through with compounding at 32.9% return on those trades, including these two losses that would have been suffered over here. There's plenty of reasons to know why not to trade that particular area. But yeah, including those two losses. So it's pretty decent, including compounding. You guys got any other questions?
Did you do the test on lower time frames?
No, I just did it on the daily time frame to essentially treating it like a stupid trade. Like, this is as dumb as it can get. If you were stupid and just literally traded based on the daily time frame on trend changes and sell and buy signals only, that is how much you would get it with compounding. Like I said, multiplying it each time, going in a full position.
I don't, but I'm sure I'll be messaging you as I get more involved with it.
Some other stuff I like to look at. So my bellwether indicator. So basically, this is a decent market structure. So we've got SPX down the bottom here, the buy sell indicator in the middle, and then telling us what's happening there as well. So this is DJI, DJT, all the various ones. I can give you a link to this if you guys want to use it. And this is giving us, signals to combine in terms of what's happening with market structure, specifically a broad, market structure. So we can see here we had this divergence, essentially predicting, hey, look, SPY's still going up, but this is not going to turn out well. And then obviously we pulled down. Now, combined, it's giving you more insight into what's happening. And then obviously same deal with up here where I've drawn this trend on the top here. It's trending down and price here was going up, indicating this is probably going to fall over, and then it obviously did. What is cool though, at the moment, it has printed a strong buy here, so on the 24th, and then obviously if we look down the bottom here, that would have worked out for you. I am quite cautious with the market here at the moment. I think a lot of caution does need to be applied at the moment, especially when we go to the fact that we're been trading inside that parallel channel. Let me turn some of this off so it's a bit cleaner. This is a 5-year parallel channel that we've been trading within. Obviously 2020 COVID low, tagged it again October 22, tagged it again October 23, tagged it again in the April crash. So it's obviously really, really, really valid. And then, at the moment, we're toying with the top of it. And it gets even worse. I always like to track specifically SPX because it's obviously, it is the market, whereas SPY is just the ETF tracking it. And, when we look at the parallel channel on SPX, we can see that, it's just a clear double rejection there at that point. I think we're going to continue to reject. If we break out above, it's going to need a lot of momentum to push through. But that parallel channel again has held for 5 years. So I know it's quite a bearish outlook right now, but I'm just protecting the capital essentially, and that's telling me not to get in when we tag up here. So, and that's the other thing I wanted to say with the indicators. Trade them. You can trade them on anything, trade them however you want, but you should be looking at the index. So when you're looking at these entries and exits, you should be looking at them on SPX. You should be looking at on NDX. And then the same with metals. When we're looking at, gold, look at gold. Don't look at the ETF. Obviously trade the ETF GLD, whatever you want to trade. But, same deal. You want those signals to be telling you what's happening on them. So when we look at gold at the moment, we can still see sentiment for heavy buying. And then obviously that's working out. And we know it's breaking out right now as well. We've had that trend change when it uptrended and it remained, which is good. And then obviously if we go down to turn on our signals, we had the buy signal here, a sell signal there. It definitely shifted. And then again, a buy signal on here. Now, when we go to shorter time frames, you obviously get the signals earlier, and you get trend change signals earlier too. So again, it's a combination of looking at all different time frames and working out what you want to do. It's never going to make you the perfect trader, but it is going to make you a better trader. Obviously, I always use my own TA as well in terms of looking at what structure looks like, and wedges and parallel channels, and trying to figure out what's going to happen next. And this one, I know some of you in the Discord I've been saying for days, like, it's gold, get in on gold. And hey, yeah, sure, that's what's happened. It's breaking out. And then also, obviously, interestingly, here on the day chart, you got these big strong sell signals. Obviously, big shifts in RSI and everything at that point was telling us, get the hell out of this thing. Personally, I wouldn't have got out on this one. I just knew gold was going to keep going, so I would have ignored them. But it did tell you to get out, and then it told you to get back in. So, yeah, that's about it. If you guys got any other questions, then hit me up.
Thank you, Kirk.
Yeah, no problem. All right. Well, I guess that's probably it. If you don't have any other questions, I don't have much else to tell you. They're pretty basic. Just use them all together, and you're going to get that market look into what's happening, and that's the goal, is to know what you should or shouldn't do. Like I said, it's not going to make you a perfect trader, but it's going to give you a hell of a lot more information on what's happening, especially when we get into sentiment and things like that as well. You're getting more information than what everybody else has, and I treat it exactly like that. So it's like a video game. You want to try and beat it, and this is giving you a lot more information and ability to beat it. It's got the cheat codes.
Excellent.
Awesome.
Great. Have a good afternoon, gentlemen.
Okay.
I will see you guys in Discord tomorrow morning.
Okay, great. All right. Thanks, guys.
Thanks again. Thanks, Kirk. Bye.
Sure.